One stock just cracked today's top 5 for July 15th, ISRG. Intuitive Surgical is down 6.78% today, and down 37% from its 52-week high as surgical robotics giant taking a serious beating. The news headline says the stock looks close to fair value now, but here's the real question. Is this the bottom of the drawdown, or are we just halfway through a deeper reckoning? We're sitting right on major support at $378.50. Volume is 2.3 times the daily average, and the options market is screaming bearish positioning. This pattern looks like a potential setup brewing, but we need real confirmation before stepping in. Let's break down exactly what ISRG is telling us right now. The chart is telling a clear story here. ISRG started the year near its 52-week high of $603. And we've given back nearly 40% of that entire move in just a few months. Right now at $379.50, we're testing a critical support level, the level where buyers stepped in before and held the line. Look at the moving averages. The 50-day is at $421.46, sitting well above current price, which signals a strong downtrend. The 200-day is at $487.47, even higher up there. That's a textbook bearish crossover. The 50-day has crossed below the 200-day, and that's a red flag for continuation lower. Above us, resistance is at $443.84. If we bounce from here, that's where profit takers and short sellers are waiting to reload. RSI 33.42. That's oversold territory, meaning the stock has sold off aggressively enough that a short-term bounce is statistically likely, but we're not yet at panic level extremes below 20, where capitulation really happens and bottoms form. Volume is 2.3 times the daily average on a down day, which is telling. This tells us selling is happening with real conviction and force, not just trickling out slowly. Taken together, ISRG is beaten down and the selling pressure has clear momentum behind it. The key question is whether that volume represents smart money distribution, insiders, institutions, or just panic selling by retail traders. The answer to that question matters hugely for the next 5-10 trading days. Here's the problem with ISRG right now. The news says it's close to fair value, which means fundamentals don't justify a rally. Earnings are not listed, so there's no near-term catalyst to trigger a bounce. For ISRG to recover meaningfully, we'd need one of three things. A positive catalyst from the surgical robotics sector, maybe a major hospital adoption or regulatory win, a margin surprise that beats expectations, or news on a blockbuster product in their pipeline. Without one of those, fair value pricing limits upside. That's why our conviction is LOW. We're watching for evidence, not betting on hope. Put-to-call ratio is 1.438. That means for every dollar bet on ISRG rising, $1.44 are bet on it falling, which is very bearish options positioning and tells us smart money is still protecting downside or betting on further weakness. Implied volatility at 0.9966, that's near 1-to-1 parity, meaning options are not cheap but not expensive either relative to historical norms. For a potential bounce here, we need that bearish positioning to unwind. If we get a reversal candle, call buying could accelerate a bounce as shorts cover and bullish traders step in. Watch neutral means exactly that. We're watching, not buying yet. But if you're a buyer at support, here's the setup. Entry zone is $378.50 to $379.50 right where price is now. Stop loss is $357.04. So your risk per share is about $22.46. First target is $422.72. Testing the 50-day MA. Second target is $443.84, resistance and prior swing high. Third target is $565.50, that's a 49% move from here. Risk to reward is 1.92, meaning you're risking $1 to make $1.92 on the third target. That's favorable if ISRG confirms a bottom, but confirmation first. We need either a large green candle with volume, or a few days of consolidation and a breakout back above the 50-day. Until then, watch. Intuitive Surgical is a high-quality business, but the chart is telling us fair value, not bargain territory. You're looking at a stock that's oversold, at support, with bearish options positioning and no near-term catalyst. That's not a reason to buy, that's a reason to wait. Watch is our stance. If you see a reversal candle close above $385 on heavy volume, or if ISRG consolidates for 3 days and then breaks above the 50-day moving average, that's your confirmation. That's when watch flips to BUY. Until then, keep your hands in your pockets and your eyes on the chart.